What's good there, guys? What's good? What's good? What's good? Nice to have you guys there in the building. Hey, Gregory, I can see you there in the building, man. What's good? Let me open up my camera, guys. Let me open up my camera. Whoever's there in the building, guys, go ahead, open up your cameras. Oh, it's Friday. Let me put the shades on. It's Friday. It's Friday. It's Friday. I don't need to look at any charts, guys. I don't need to look at any charts. I can have my eyes blacked out today, guys. I can have my eyes blacked out today. What's good there, Sean? I see Gregory there in the building. Siabonga Sitole there. What's good, man? I see Dimpo there in the building. What's good there, man? What's good there? I like the hair there. You're looking fresh, looking fresh. I see Namo Ravi there in the building. What's good? Nice to have you. I see Bongani there in the building, man. You chill there, you chill there, you chill there. I see Chandra and family. Nice to have you there in the building. Nice to have you there. Hey, what's good? Hey, what's good? Hey, what's good? I see Romeo there in the building. Egbert there. What's good? What's good there, guys? I see Calvin. All right, guys, the building is full there. Breezy. What's good there, man? I see there Pims, RSA. What's good there, man? What's good? What's good? Let's see the names. Let's see the. Hey, there's some difficult names there, man. I'll pronounce the second name there. Udo. What's good there, man? I see you there in the building. I see you there in the building. You guys are here. You guys are here. You guys are here. You guys are here representing in the building today. Kelvin, what's good? What's good? What's good there, Kelvin? You got some disco lights there going on in the back there, man. What's fresh? What's fresh? What's fresh? Let me check what's going on there in the chats. I see that Dan there is in the building. What's good there, Dan? What's good there, Dan? I see Rendani there in the building. Hello, hope you're good. Been trying to get a hold of Receiver because I want to join the lessons for this month. Can you please help me with his number? I doubt if you do have a number, I doubt it's his personal number. But if I do give you a WhatsApp number, you still won't be talking to him directly, either way. Even if you DM'd him on Instagram, you still wouldn't be talking to him directly. Even if he responded, you'd be talking to the PA. But yeah, what's good there? What's good there, guys? I see you guys there in the building. I see Smith is saying, hey, Chris is saying we're in the building there. St. Lukele, I wear my G. Sandiso in the building. I see Panza saying there in the building. What's good there, guys? Nice to have you guys there in the building. Awesome to have you guys. As you guys know, it's Friday today, guys. Friday today. So we're going to be getting into it's kind of just, I guess, our psychology session where we kind of going into anything that's kind of not chart related. So we want to go into what was our experiences of the week? How was the trading week? And then kind of we reflect on the trading week, we see what we can improve on, maybe what we should be paying a little bit more attention to, just so that we keep moving forward, guys. We keep moving forward. We know that every day is literally a learning day. Literally every day is a learning day. I'm trying to read the chats and also talk at the same time. But wait, let me read this. It's a direct message, so let me just read it to myself first. Okay, I see P20. I've just read your message there. I've just read your message. Can P20 light? Okay, that's okay. All right, no stress. Shall we call you T-Main? Anything is fine. Anything is fine, man. Main is fine. Main is fine. Good day, people. Ron's is there in the building. I see Tavanin Kao. Mr. Mamba, what's up, gang? I see Mr. Mamba's in the building. Mr. Mamba, just raise your hand there so you can come up to the front if you wanna say something. But otherwise, we're getting into the week. I see Joshua saying Zimbabwe is connected. So otherwise, guys, just chat there, type there in the chats. How was your guys' trading week? Let's see how your guys' week was. Anything that you guys came across, just so that we can reflect, see maybe where we can touch on, where we can lend a helping hand if we can. And otherwise, I'm gonna share a little bit about my trading experience with you guys. So this week again wasn't the most active week, but it's looking absolutely beautiful. If you guys are with us on the Saturday session, preparing for this coming week, I think we were looking to trade 4 pairs this week, and out of those 4, 2 of those pairs gave absolutely stunning setups at our points of interest. So I guess this week was a nice week. It did give me some trading opportunities. I did involve myself on AJ, and that was kind of about it in terms of like looking to swing or looking to hold or whatever. AJ was the only trade that I kind of got in for a long term. So the fact that I wasn't really very active this week, it gave me an opportunity to like to do crap, but like to do crap on a demo account. So what I did this week, I was just experimenting. I just opened a new demo account and I just decided that, okay, you know what? I'm going to try and feel what it's like to see a full screen of blues. I'm going to go in barcode. I'm going to do all. No, I gave myself, since I wasn't like actively trading my own money, I gave myself an opportunity to just observe my emotions, like pretend like it's real money and trade this demo account. And kind of just looking at my emotions, I realized one sneaky thing about emotions is that the only way you'll catch them is, or rather, the only way you'll be able to properly respond is if you catch it in the build-up. If you're in it already. But if you're able to identify, like, if you're, because kind of when I looked at my emotions, it's kind of like, okay, cool, an emotion is making me feel a certain way, right? I feel the certain way. So it's kind of like my body is preparing to do something. Like if I'm fearful, my body is releasing chemicals that make me feel a certain way to respond to a certain threat. And in this case, my fear is from the market. So unfortunately, there is no real danger, but whatever I'm feeling, it's from loading your whiteboard. I didn't load anything. What is going out? What is going on? Someone is loading something. Okay, cool. But anyway, I'll just try and see what settings we can deal with there. Let's do this and then do that. Cool. So I just removed you guys from sharing whiteboard. But otherwise, like if you observe an emotion, right? An emotion is just kind of your body preparing to do something. So if you can kind of like identify the build up of how you feel, maybe when you start breathing deeper or whatever the case is, at that point is literally the only time that you'll be able to catch it. Because once I realized that once I started getting into something like maybe kind of just recklessly closing position. Okay, that was the intention, but at the same time, it gave me an opportunity to observe what I'm doing. And when I observed myself, for example, when I was just recklessly closing trades and doing crap like that, only when I was done, I realized that, okay, cool. Now I can feel my hands are buzzing now. I can feel like I want to shake a little bit. I was into something. I was really into something. And it's kind of like you'll never really realize it if you don't catch it at the build up. So I guess in terms of my own trading, there's not really much. My trading week, this week, at least this week was an up week. Last week, you guys know I had a nice down week, but this week was a nice up week. AJ gave us 2 sells, guys. If you remember the setups that we took, AJ tapped into both points of interest, giving us 2 opportunities. The first opportunity, if you managed well, you got stopped out maybe at break even. But the second opportunity, we got an opportunity to partial out and maybe even scale in, but the scale in is probably still at break even because it's just been consolidating. But I guess in terms of the trading week, there's not much that I can share because it's just normal me looking for trades, same old, same old. But just in terms of observation, yeah, I guess I could share that about just observing the emotions. But otherwise, let's see what you guys are saying there. I see Frank is in the building, man. Frank is in the building and he's chilling there. Man, you made your bed, you got up. I thought you're a trader, man. Traders only get up at 10 a.m. This guy, your bed is made already, man. Nice to see you there in the building. Other mentors, I see Smooth's there in the building. I know Mamba's here in the building somewhere. But otherwise, let's see what you guys are saying there in the chats. I had a profitable week this week. Gold did wonders for me this week from Breezy. Yeah, Mamba always says that if you can find a strategy on gold, you've literally found gold. You struck gold. Because gold is something else. Yeah, gold is something else. Myself, I've left gold to the professionals. I've left gold to Mamba, Jabu, Smoo, all those guys that can stomach what happens on gold. I've left gold to them. I've decided that the only purpose gold has for me is finding a long-term directional bias in terms of AUD. Gold is going up. I assume that exports in Australia will be more expensive. Maybe Australian dollar will increase in strength. And then I have a nice direction for myself. When I'm looking at AUD CAD, I'm looking at gold, and maybe I'm looking at oil as well, because the CAD kind of is correlated to oil to some degree. I can look at oil and I can see, okay, cool. Oil has obviously been expensive and gold has obviously been dropping. For some weird reason, gold has been going down. For some odd, weird reason. I don't know how, I'm talking about high time frame. Some odd reason gold's been going down. So obviously we can then conclude that whatever's being exported in the CAD in Canada is obviously being exported at a much higher price. So CAD should definitely be stronger than AUD. And if you're going to have a look at AUD CAD, we can see the AUD CAD has definitely been higher time frame moving down. So I guess I would just use gold for for correlation purposes now that I've left it to the professionals, because yeah, hey, I think it didn't allow me to practice the type of risk management that I would have loved to practice. I'm the type of person that wants to risk. I want to risk $2 to make $130 from that trade. Like I'm very stingy. I want to lose and lose and lose and lose and lose 20 times and still not be able to feel it. What do you think about USD CAD? I know Smooth does trade USD CAD. Myself, I don't trade USD CAD, but I know that you can trade USD CAD by looking at oil and maybe by looking at the DXY. But otherwise, from when I used to look at USD CAD, I think from what I remember, USD CAD is a very lovely pair when it comes to structure. And especially when it comes to trends, I guess CAD in general, any pair that has a CAD as a code pair, in general, you'd find like a fairly nice 4-hour trend, like on a 4-hour time frame. Like most of my analysis is done considering 4-hour structure as like my most important structure. So when I'm remembering from 4-hour structures and 4-hour trends. I feel like USD CAD is an awesome pair. But I guess, especially for a beginner, I would say stick to a major like USD CAD, like a major that will allow you to get used to some things, that will open you to maybe you can say that a major will allow you to trade where you'll have like small spreads and stuff like that. So it makes sense in terms of, because there was a period of time, right? I remember I had an account. There was an account I was trading, and maybe this is for someone that maybe hasn't been through this phase, like in their trading, where you know that you can make money. You definitely know that you can make money, and it's just you playing the statistics. There was a period of time where I had an account, right? Let's just say it was $100 account. Now this $100 account, I was trading it for a while. I think maybe about the space of a month and a half. We're just calling it $100 account just for mathematics purposes. I was trading it for about a month and a half. And after a month and a half on this account, I was at break even, right? In terms of my balance or what was in the account, I was at break even. But when I went to go and look at my profit and loss, because like I told you guys, I like to take very small risks with big RRs, and that in turn obviously leads me to use big lot sizes. So I try as much as I can to use small lot sizes, but I tend to use a lot of big lot sizes with a very small stop. So because of that, I realized that, oh damn, I've been trading this account for a month. I'm still at break even, right? Take into account that I'm still at break even. But when I go to the balance, the way you see what's been happening on the account and all of that stuff, the overall account, profit and loss, is minus 70 something dollars, like almost minus my whole account balance because of the commissions that I've been trading. So it means this whole time, what I've been doing, because I've been trading with such a high lot size and I haven't really been moving anywhere in terms of the actual account, all I've been doing was I've just been giving my broker commissions. And because I'm trading a zero spread account, which means that I don't get charged in terms of spread, I get charged in terms of the lot size that I'm using. Like if I use maybe a standard lot, I'll get charged maybe 30 cents. Or if I use a mini lot, I'll get charged 3 cents or something of that nature, 30% of a standard lot. Because I'm trading that way and the lot sizes were stacking up, I ended up with like almost minus the whole entire account that I was trading in terms of what I've been generating in commissions. Yes, my overall account balance was negative. I didn't feel the loss, not like I lost money, but I generated a crap load of money for the broker. So I guess maybe just an experience to share with you guys. If you guys are thinking of trading bigger volume and I guess tighter stops, like, you know, with a trading style that loses a lot more, but capitalizes on bigger risk to reward ratios, rather than a trading style where you kind of like passive. Like I know Smooth there, Smooth is a swing trader. His second name is, what's that guy from Falcon? Mark Hutchinson. Yeah, Smooth's second name is Smoothiso, Mark Hutchinson, Frank. and I forgot his surname, but that's his full name. His second name is Mark Atkinson. Man, tell them how, tell them, I know how it's spelled, but I don't want to butcher your surname. I don't want but I was just reflecting on how passive you trade in terms of taking risk, in terms of patience, in terms of everything, just your overall trading style, because you're swinging, it's just so chilled, man. Like you can ride a skateboard while you're trading.
Yeah, that's one of the main reasons why I chose to trade the way I did. It's because the reason why I became a trader is not even about money, it's about time freedom. So the moment you start like changing, you should plan your trading according how you want to trade for the next like 50 or whatever years you want to be in the game. So the way I've chosen to trade, it's sustainable. I can trade. I only look at the charts only twice, in the morning when I wake up and before I sleep. During the day, those hours are mine, unless I don't have much work or any session. So those hours are mine. So that's a very key thing. Whenever you start trading, ask yourself, in the future, how do I want to trade? Do I want to be constantly looking at the charts, or do I want to enjoy my freedom? So that's one of the main reasons why I chose to become a swing trader. It's not even about the technicals, it's about the time freedom.
Sure, I think that's fair, man. And because that comes from an aspect of you knowing why you want to be that type of a trader, I feel like there's only pros there. Like I don't feel like there's any con in being that type of a trader.
There is, as you know, there's no perfect strategy. Someone might see like,
I know from my side I can pick flaws.
exactly. But you have to know your strategy, like you know yourself. Like everyone has their flaws and their strengths. So the strategy is like a human also. You have to pick whatever is congruent to you.
There's a lot of conversations that we have with Mamba, and we always talk about I thought, oh Lungani, you look like Mamba, man. You've got the same hairstyle. I thought that was Mamba. I see Lungani Charlie. I was about to ask you to unmute so that you can say it yourself.
But even the ESS, I thought it was Mamba.
Yeah, everything looks exactly like Mamba. Mamba's doppelganger. But there's times where we have conversations, and there's something that he always says, that like you look at like the way that you think. Like there's people that think, that are very analytic, that can gather information, that can consume information, understand information, and then obviously interpret the information in a reasonable fashion by taking their time. And then there's other people that are more split second, that I can make a decision on an impulse. I can gather just a few elements of information, and from those few elements of information, I'm able to make a split second decision. And you see, like that is something that I guess is natural to you. The same way some kids in my school were always on the top 10, some were just never there. Some things are just natural, some things are just a product of your environment, the things that you surround yourself in. Even like the system that you choose, your trading style is an environment that you choose to surround yourself in. If you're a scalper, you're choosing to surround yourself in a high-paced environment. So that's an environment that obviously contributes to how you generally respond and how your mind works. So point being is that, like if you're someone that generally makes those decisions faster, then to be in a high-paced environment, like an environment of a scalper, would be more conducive for your process, would be more conducive for your own strategy. So it's kind of like what you just said now, Frank, that you know yourself, and because you know yourself, you're able to develop a process and a strategy that kind of coincides and reduces the resistance between what you're trying to do, what you're trying to accomplish, and the individual that you're trying to get to do that. Like the less resistance there is. Like if I'm a passive person and I'm very like, I'm designed to be a swing trader, and I try and put myself in a scalper's environment to make those decisions and all of that pressure, it's gonna be so easy for me to, number one, make stupid decisions, because generally that's not my environment, that's not how I efficiently work. And number two, I'm gonna crack under the pressure in a way shorter period of time than someone that is inclined to function in that type of an environment would be able to function. So thanks for sharing that, man. Thanks for sharing that there. I don't know if anyone else there has some input there. I don't know. Let me go through the questions there. See, Evans is saying, do you recommend cent accounts for applying the risk management strategy that you spoke about risking $2. No, that I was literally just making an example, but it's the same type of of risk management approach. It's just reminding me of something. You know, I'm sure you guys see CopyZilla on YouTube. This guy that like he exposes people that do crypto scams and all of that nonsense. So there's a genuine trader, like an actual genuine trader, a person that I for fact know that he trades. He's an active trader. But there was a video that he made where he was giving an example about goal setting, and he was saying that you making a goal is like, you can say for yourself, I'm going to make the goal of achieving 2% a day. And CopyZilla broke down that video and insulted this man and made him seem so stupid for saying 2% a day. And 2 years later, that was 2 years ago, like 2 years later, being like now recently, he was talking about his experience then, because he's a trader. He doesn't need to involve himself in drama. Like he's actually making money. Like he just let the drama go. So now recently someone was interviewing him and they brought up that drama. And they asked him like, now generally, what response do you have? And he was like, man, if you watch the video, the people that I was talking to understood that I was talking about goal setting. And the example of making a goal is telling yourself, I'm going to set 2% a day. A goal doesn't mean I am hitting 2% a day, but a goal is setting this task or setting this thing for myself to achieve. So it's kind of the same English now. I'm making that connection that now I wasn't saying I do risk $2 per trade, but I was just using that as an example figure of speech. But I guess what I can say about risk management, like personally, I feel like risk management is my biggest edge in the markets because those are numbers that I can control. I can control how much I risk. I can control the stop loss that I set on the trade. Those are numbers that I have full control over. Obviously, I don't have control over how the trade plays out, but I do have control over the risk parameters that I set. So the type of process that I try and use is a process that has a high, or let's just say a low win rate, but a high risk to reward ratio, meaning I would lose a lot more trades than I used to lose when I used to swing trade. Swing trading is kind of a process where you have a lower risk to reward ratio, but a higher win rate. Like maybe you've got a 60% win rate, but you're only aiming for those 1:3s. Now that I am trading a lot of the smaller timeframes, I've accommodated for that noise. Like I'm not trying to force into my process and saying that, oh, I've been trading for X amount of time. I once caught a 1:38 or 1. I'm not trying to put that in my head, but I'm trying to say that, like Sbu said in his example, like he's adapted, he's using a process that will allow him to trade for a long period of time. I'm using a risk management process that will allow me to trade tomorrow and will allow me to trade the next day. Because I'm on a low time frame and I'm accommodating for the presence of more noise, I'm accepting that my process is going to lose a lot more. So what I'm opting to do is take smaller risks because I understand that my process will lose a lot more since I'm trading actively on the smaller timeframes. So taking those smaller risks, but taking or looking for higher risk to reward ratio trading opportunities. So I guess, yeah, use a cent account because I would generally say trade with an account that will allow you to take the smallest risk possible so that you can always dial things back. Because I feel like you'll always get to a point, or you'll eventually get to a point where you reach a losing streak, where it eventually starts to eat into your confidence, starts to eat into your psychology. And at a point like that, you would want to dial back. Now, if you went into trading NASDAQ, trading a CFD account, and you only had, let's just say you're trading a ZAR account, and I hate trading ZAR accounts, and I don't even know why I'm making an example of the ZAR account, but let's just say you only had 500, and you know that you can only open one 0.01 position on NASDAQ with a CFD account on Veracity. And you've been in a losing streak, and now you're at that last 500, and it means you can only open one position. So I'd always say trade with an account that can give you that flexibility, that will allow you peace of mind psychologically. Like it doesn't mean because you're trading a cent account that you need to trade at 0.01 on NASDAQ. You could always pump your lot size up to accommodate what you would have traded with a CFD. But I guess in this case, you can still dial it back if you chose to. So I would say that, yeah, definitely do trade with a cent account just for the peace of mind. What do you think about US30? US30 is awesome. US30 is awesome. US30 is the bread and butter of the nation. That's for sure. US30 is the bread and butter of the nation. I think like anything, if you ask my opinion about any pair, it would be subjective. I would be telling you from my own experiential knowledge, and that's obviously going to be biased. Like anything out there, like any other asset, like any currency pair, whatever index, it boils down to the level of competence that you have. Like Warren Buffett is trading US30, but we're not making money like Warren Buffett because we don't have the same level of competency and maybe the same trading style and all of those things as Warren Buffett. I don't know, there's someone on Instagram that's name is US30 that's making 6 million a week. He has a different level of competence, and that's why he's able to make that. So I try maybe not so much to chase the knowledge. Listen to me, chase the knowledge. I try not to chase the money. I try not to chase the money, like to chase what's attractive, but I look for what's common enough that I'll be able to gather a lot of pieces of information on. Like, for example, if I wanted to learn about synthetic indices, how many pieces of information and people that inspire me trade synthetic indices? Not many. But if I chose to trade a currency or an index, there's a lot more people that I can gather different pieces of information from, in a sense of I can still keep moving, I can still keep growing, I can expand my knowledge. Not that I'm looking for something new to learn, but I'm hearing other people's opinion in different ways. So I feel like I would like that element in what I'm going to trade, especially in the beginning processes. Like I want multiple opinions. Maybe I want to practice one process, but I want to hear multiple opinions. Yeah, so I would trade something that's common enough that I'll be able to learn deep enough about it. I actually had $1 on XM USD came through for me. So now I have a balance of $9. Nice. You came back, man. You came back. Yeah. Hey. I also feel like that sometimes, that it's not over until you can't place a trade anymore. Like I know both me and Jabu. I don't know where's Jabu. Jabu's not in the session today, but he was here. His PC is here. It's on. He came and started it like he was gonna work today or do something. But it happened. I know it both happened to both me and Jabu, where there was an account that we were trading that we were trying to do something, and we brought it like to the brink, like to the point where if we had lost one more position, like margin requirements wouldn't allow us to, like whatever would have been left would have been not enough to trade anything like worth what we were trying to do. But yeah, we managed to bring it back up, and I guess just keeping a straight head, man, and trading through the statistics. But I guess in the first place, we shouldn't be trying to do like, if ever I'm trading and I'm putting myself in a situation where I'm like going to the brink of like losing an account or like blowing an account, it means a couple of things to me. It means either I'm over risking, it means I genuinely don't know what I'm doing, or it means I don't have enough capital to efficiently trade through the statistics. Because I promise you guys, that is something real. And I can tell you guys, like from my own experiential knowledge, the biggest thing for me that I can say that Forex Chasers has opened me up to is capital. And I can promise you that capital does make the difference. Sometimes you might find out that you've been trading something that honestly does work, but you've only been able to trade that thing with $100 account. And that $100 account maybe is just not able to sustain you through the statistics of taking your 16 losers that you didn't know that you were going to expect, but your system does give. Maybe you just didn't have enough capital to trade through that statistic. So I can promise you guys that capital does open you up to, I guess, just a broader experience of longevity and how long you can trade through your process. And I guess it goes back to what I was saying, that create a risk management process that allows you, like, think about it very, very much long-term. Like ask yourself, the way that I'm trading right now, the amount of risk that I'm taking today or that I took today, will I still be able to take that same risk every day for the next 2 weeks or for the next month? And will I still have my account? if I do that? If I take the exact same risk that I took today for the next 30 days, will I still have this account? And I feel like if your answer to that question is maybe no, then it goes back to one of the few things that we mentioned, that either maybe you don't have enough capital to trade through the statistics, you generally don't know what you're doing, or yeah, a couple of other things. But otherwise, let's just keep going through the chats as fast as we can there. I see Piwa's hand is raised. Let me just go through as many of the chat. Let me at least try and kill half, and then I'll unmute you. Bongani is saying, which brokers do you guys recommend for beginners? So I guess it doesn't really matter at which point in your journey you are. Brokers just dependent on what do you need from a broker. So we use Veracity. Myself, I personally use IC Markets as my main broker, and then XNES is like a secondary broker. Yeah, those are the only two brokers that I personally use, aside from whatever prop firm brokers that have thousands of different things. I see the miso Zondi there. Well, balance is key. Balance is key from Dan. I see that there. See greetings there. Okay, I have a direct message, so let me just read it to myself first. Okay, okay. Okay. Very interesting. Let me see who's that from. That's from. Okay, I can only see the first three letters. MCK. Okay. Evans is saying very insightful. Okay, cool. Oh, Gregor is saying, I would like to know what happened to the weekly focus that you normally used to do on YouTube. So what I tried to do with that is I tried more so to start live streaming those things. So more often than not, when we do host those things, you probably missed it like when it is there, and I rarely repost them. Yeah, I'm trying to shift my YouTube channel more away from like post edited content into like live streams and stuff like that. I don't know why, but okay, maybe I'll go back. Maybe I'll go back to posting weekly market forecasts. What can I say from losing? Okay, what I see from PWA. Okay, I think maybe that's the same question your hand is raised for. I see you saying, Mr. T, what can you say if I'm losing the majority of my trades, but I'm still profitable? I guess that doesn't really matter. Let me ask you to unmute. Let's hear more about it, man. Because if you're still profitable, I guess it doesn't really matter. What's your win rate, or I guess anything, if your process is profitable.
Can you hear me?
Loud and clear, man. Loud and clear.
The thing is that you find that maybe like for a week, I'm experiencing a drawdown. Like I get to be on a 4%, negative 4%, but next week I get to be on 6%. So emotionally, man, like I don't know how you can get to advise me, because sometimes it messes up with my mind to find that this week I lost, like I didn't make anything. So what can you say? Because yes, I'm profitable over time, but I can experience 2-week drawdown. Imagine 2-week drawdown, taking negative trade after negative trade, negative trade after, but only one trade makes up all the profits that I've lost.
And that's a winning system, dude. I feel like that's very much a true representation of a proper winning system, where it's like Christmas really only comes once a year. Like this year, the biggest RR that I caught this year was, I think, a 1:32. Once this year, 1:30 once. And it's like Christmas really only does really honestly come once. Like it's not often that you'll get a runner. It's like volatility is not always there. Sometimes entry criteria is there, but momentum's not there. Or like there's a lot of different parts, or there's like a lot of different characteristics as to like what an environment is in the market. Like maybe there's an environment where there's a bunch of small candlesticks, there's an environment where there's a bunch of big candlesticks. So I guess all of those things count into, because it's not like I'm just entering the trade, like looking for entry criteria and then managing the trade and all is gonna go well. Like every double top is formed under a different circumstance. And so
Yeah,
it's all just going to be messy, and it's all just gonna come with its own learning curve. So I guess, man, that's a proper process, because first of all, I guess what that shows me is that you're trading through the statistics, you're trading through the probabilities, you're trading when your setup presents itself. And that's characteristics of someone that's obviously long-term profitable. If you can hold yourself disciplined to follow a process, even through those losing periods, that's beautiful characteristics, dude, of someone that has the mind the mind to sustain this long term. But I think what you described is it reminds me of some of processes, like different processes that someone can take. Like people can choose different journeys, and like I keep on going back onto risk management, because I think in risk management, like most of my edge is formed on how I'm going to take a risk. How am I going to engage the market with my own money? Like so you can think about, like, there's two types of people, right? There's someone that'll start on 10K. I'll just put 10K. There's someone that'll start on 10K, and then ultimately they'll end up on, maybe, let's just say 40. I don't know what number was it?
7,000.
Cool. 17. Let's just say maybe they started on 10K and they increased their account. Now they're in 17K, right? And then there's someone else, maybe we can say Tremaine, that also started on 10K and they got all the way to 17K. Let me just try and see. Okay, cool. I can't do that. Nice. And they got to 17K. But you'll find out that the risk management processes of someone and the risk management or the risk tolerance of these two individuals are very different. Because you might find out that this guy here maybe took 1K loss, minus 500 loss, plus 2K or plus 8K win, minus 6K loss. And you might find out that his whole trade profit is so volatile, like full of emotions. What's all of this? This is just because of this kind of an equity curve, or all of these emotions is caused by the way that this person chooses to engage with risk. And then there's someone else that maybe has a slightly different risk process, maybe where maybe the losses and the wins are probably equal, but the way that they choose to engage in risk, maybe this person's process has a fewer, less types of emotions to deal with. Still, we end at 17K, but the way that I chose to engage with my risk management and how my overall account balance was shifting, my risk management played a big factor in that. And the way that I chose to engage risk even affected my psychology, how I feel about my trading, the way that I even view myself as a trader. Do I feel like I'm someone that's losing? Do I feel great about myself? Do I feel like I'm progressing? Do I feel like I'm going up and going? All of that is being heavily influenced now by this new perspective that the type of risk management that I chose to engage with created. So I feel like the process that you have is a winning process. It's definitely a winning process because you're able to trade through the statistics, but the volatility that's involved in your process maybe can be under your control in the way that you choose to engage with the risk. Like, I think at any point in time, always remember that, like, always remember that to some degree, there is a part of the system that you are in control of. Like, majority of the system, we are not in control of. We're not in control of the type of entry criteria that market will present to us. We're not in control of how market will give us opportunities to manage, whether we're not in control of any of that stuff, whether or not we're even going to get into the trade. Like, I might even think that I'm in control of that, but in all honesty, if I'm a real trader and I'm following a process, that means even that's not up to me, because market can just not give me anything for 3 months straight, and I have to be willing to sit through that. So I feel like already, man, you're on a good path. Remember that there is an element that you can control, and the element that you can control is definitely risk management. Like, I'll always go back to that being the foundation of maybe the cause of my psychological issues, or even solving my psychological problems, the way that I choose to engage with the risk and how I feel about that.
No, I hear you, Maga, and thanks for the information.
Always,
and the The nice part about risk management, I only risk 1% a day. Like I risk 0.5% on a trade. That's my trading plan. 1% a day. I'm done.
Man, that's fair. That is 100% fair. I feel like that's being very honest. That's being very honest to yourself, and in a way, being realistic for long term.
Yes. Because remember, everything that I do now will affect me in the future. It's a true reflection of me in the future. Because it's a habit. Once you do something for 40 days, it becomes a habit. So
Definitely. Man, you know that's so true. You know, sometimes I feel like just generally as a human being, we have a disconnect in between like the me that I think is existing right now, like present me, and the future me that I want to be. I generally feel like there's a disconnect between the two. Like I want the future Shemaine to be this nice, disciplined guy that's doing all of these fantastic, amazing things. But in all honesty, that future version that I envision myself to be depends on the choices, the individual that I choose to be right now, the person that I identify myself as right now is the product of that future Tremaine. So it's kind of like if I want to be maybe, for example, this person that practices good risk management. I'm just going back to the risk management thing because it's cliche now in the conversation. But if I want to be this person that practices good risk management, like I envision myself as this guy that's able to hold on trades and that comes back to MT4 and takes screenshots on a weekly chart, I should start to practice those things like right now, because there's no way that I'm just going to magically become that person. That person is only there as a product of the habits that I establish right now. So it's kind of like the person that I would like to be, I need to start pretend like how they say fake it till you make it. I'm gonna pretend like I'm that person. I'm gonna go on my MT4 and I'm gonna hold that trade and I'm not gonna make a stupid decision. And
no,
I'm even gonna lie to myself and convince myself to do it to the point where I even pretend, man, I'm in a movie, I'm acting, and there's cameras on me, and this is the moment of pressure where everyone is watching to see if I'm gonna do this stupid thing and close this trade, or does he actually follow his, like if it takes me to lie to myself and like literally go crazy and convince myself that I'm living somewhere else and people are watching how I'm trading right now, and someone's watching and they're gonna question why I made that mistake. Like if it takes that for me to stick to my system or to start to try and become that person, then yeah, I see whose hand is raised there, man. I was watching you, man.
Yeah, just to give him a small tip on what he's saying, I feel like he's judging himself too quick. Like 2 weeks, that's not a lot of data for you to conclude you're a good trader or you're a bad trader. No company reflects on their results on a weekly basis. At least give yourself 100 trades, at least 3 months. After that 3 months, that's when you can say, okay, this is what I'm struggling with, this is what I'm not struggling with. Because that emotional volatility, for only 2 weeks, you feel like you're not good enough or something's wrong. That's a small time to judge yourself, especially in trading. The world's best companies, like the largest company in the world, I think it's Apple at the moment, they don't review their sales every week. They wait at least quarterly. That quarterly is not enough for them to make any changes to say, okay, let's lower the price of the new iPhone or let's stop this and that. Give yourself a lot of time. Like before I made any like serious changes to my strategy, it took me like 2 years. 2 years of doing the same thing, repetition after repetition, because this is all about system dependent. Like you can't judge a system on a short space. Give yourself 100 trades, then you will see patterns. Those patterns will give you, okay, my stop loss is too tight. Okay, I'm seeing this over maybe like 50 times or over 50 trades. That's when you can start making those changes. Why? Because you have data. Like making changes over 2 weeks, that's not enough data. So the smallest tip I can give you, give yourself at least 100 trades before you can judge yourself and say, okay, I'm not profitable or I'm in a drawdown and all of that. You can be down today and tomorrow you make 15%. No one is arguing like, why am I making so much profits? Everyone is happy about profits, but no one is happy about losses. But at the same time, losses is where you learn. You cannot learn much based on your profits. So I guess that's my tip. Give yourself at least 100 trades before you can judge yourself in terms of profitability or not.
No, yeah, thanks a lot, Makai. I hear you. And
You're welcome. You're welcome.
what they always say, a good winner is a good loser.
Exactly, man. You learn a lot from your losses than more than your winners.
I think I would agree. And you know why they say that? Because there shouldn't be there shouldn't be a difference between winning and losing. Like
Exactly,
a trader, like the moment of being a trader is not built whether you won or you lost the trade. Doesn't matter in the grand scheme of the universe. What matters is that you follow the process, and that's the moment a trader is built. When, like Svu said, that it's process built, and sample size is king. Sample size is definitely king. Okay, I see. No, that name that starts with MKC. No, your question wasn't inappropriate. I just forgot. I forgot to answer it. I forgot to answer it. But he was just asking about. I can see your second question now. He was asking about intermarket analysis. So basically, I feel like intermarket analysis is a thing that I've seen that being done by more institutions. Like if you watch people that trade, like maybe for a hedge fund, or if you go search on YouTube, like behind the scenes of inside a hedge fund, like while people are trading, and you see them using thousands and 10 millions of screens. That's kind of, in a sense, aside from maybe each of those stocks being traded individually, there's a process of intermarket analysis that's also going on, like where positive correlations are being traded at the same time, and then as well as maybe there's some inverse correlations, like maybe something is for example positively correlated and they stray far from each other, then maybe they would sell one and buy one, assuming that they would come back to price at some point in time, or some like that type of intermarket analysis. I feel like is done on scale. I don't know of any like day traders, like retail traders, that actively use intermarket analysis like the way that I feel like it should be done. I feel like looking at the DXY and coming back to Euro USD, yes, it's a form of maybe intermarket analysis, or maybe looking at NASDAQ and S&P 500 and finding a correlation and coming to US 30. Yes, it's a form of intermarket analysis, but I feel like we remember that when we're talking about analysis, we're talking about sets of data. And yeah, that's why I just feel like people don't do it at scale now, because that the amount of data I feel like makes the difference between someone that's really doing like intermarket analysis. The movie plot. Please go into detail about account. Wait. Count. Okay, those words didn't want to come out. Account compounding, and how can that affect one's psychology? Pulling out when the market pulls back. So we were talking about this literally just, I think it was like a couple of days ago. Like we were asking ourselves the question, like whether or not, because cool, I withdraw from my accounts and all of that stuff, and then there's times where you want to compound an account and stuff. So we were debating on, like me, Mamba and Jabu were debating on whether or not you, like, man, you're calling yourself a trader. What should you be doing? If you call yourself a trader, are you someone that should be compounding, or are you someone that should be withdrawing? And the truth is that you should be doing both. And what it boils down to is the purpose that you are trading for. Like there's someone that's trading for the purpose that, like right now, maybe I can say I'm an individual that is at the stage where I don't have a large capital, and I need a large capital to be able to trade the way that I can see, like the scale, the way that I see, like the number that I imagine, the day that I say that I'm going to call myself, yeah, now I'm a trader. The day that I see that number, I need to get myself to that number. So because I'm not at that number, the reason why I'm trading now primarily is for the purposes of compounding the account and growing the account. And then there might be another instance where the reason why I'm trading this account is just for the purposes of withdrawal. Like I'm trading this account to use this money and not for the purposes of achieving a certain goal in terms of a monetary value. So I feel like the psychology of how compounding affects the psychology is it comes back to going into the account saying that I'm coming into the account with the intention of compounding. Because if you come in with the intention of compounding and you end up withdrawing along the way, like, I mean, not having made the decision that I'm going to compound this account and you withdraw along the way, and then you go back, like after you withdraw, maybe you started at 100, you withdrew 100 already, like you're nice, you had Nando's, you took your girl out, life is good. But if you look back at your goal of compounding, you're exactly at the same point. Now, if you look at that type of a context, you had an intention of why you started this account. And because you're not fulfilling the actual intention, what you've agreed upon, it's going to negatively affect your psychology. So is this Java? Guys, there's the market maker. This market maker is finally here. What's good, man? What's good?
Tell them that I'm going on vacation. That's why I'm not.
Man, and guys, I wish you could smell through technology. My man is smelling nice. Guys, yesterday he came here. Let me tell you, this humble guy is driving. Yesterday he came here to come and press his hooter here because me and Mamba, we choose to be humble and we choose to just catch taxis and walk. My guy decides, okay, no, because I'm the only one of the three Forex Chasers mentors that are staying here. Let me come and flex on them. And then he comes with petrol receipts, guys. Let me tell you how this guy flexes on us here in private. He comes with petrol receipts and he's telling us, guys, do you know the price? Do you know what's can you guys believe what's the price of? He's touched, but we don't understand why he's touched because I don't know what the hell the price of petrol is, but my man's is, and now he's smelling. You see, when someone's got wheels and money, it's 10:54. My man's is smelling like you see the way that you smell when you're taking someone like Faith and Gets, like you've been wanting to take this person out, you've been DMing them for your whole life, and you finally got a response. You finally got a yes, let's meet up at this response. That guy at 10:55 in the morning is smelling like that. I open the door. I'm just joking. I'm just messing with you. But guys, let's try and round the session up off there. I was just messing around a bit. Okay, let's see. If you okay, but that's where we were. I think we just went up. Bro, what is inner circle trading? ICT. I think it's a is it a person or an institution?
ICT is an institution. ICT is an inner circle traders is an institution. They teach SMC.
Okay, so ICT is an institution. Yeah, ICT is an institution that teaches smart money. Smart money. How can we learn about it? YouTube. That's the quickest way to connect yourself. Wayne Johnson, did you compound until $1 million? Man, I haven't touched the M yet. But best believe at some point I will. I'm not stopping until I do. You can guarantee that. I'm not stopping until I do.
Just making a few tweaks so that you can come into
This guy, you know, like and that's how I assume like a lot of people calculate their net worth on like chunks of money that's laying there. Like if I so maybe say I'm a millionaire right now, I'm thinking about a chunk that's there in PayPal, there's some Bitcoin, there's some investments, there's some stocks, there's some whatever, maybe there's some money in my account. That's how some people are classifying themselves as millionaires. But I feel like there's definitely like there's definitely a big difference. I feel like being a millionaire for me kind of is a product of how you generate money. Like how the money is being generated. Yeah, even consistent generation, I feel, yeah. I feel like if it's coming in and like you can have things, but if those things are not coming in and like compounding, then in a way it's kind of dead weight. Like if it's not growing, is it really an asset? Bro, gold. Where's it going? Hey, market maker, where's gold going? Let me see. I don't know where's gold going, guys. I'm not sure.
Straight to 18, that level, and then it will continue going up.
Okay, so John was looking for a higher time frame upside. He's looking for retracement down to 1813 and then some upside continuation. Consistency. Jeez. What can I ask that? Can I ask you guys that question? Can I maybe ask you guys that question? And let's rather have a discussion because it's a very nice thing and it's very subjective, consistency. So what do you guys think maybe is consistency? Or maybe you guys can answer different elements of the question. Maybe some other people can answer. What do you guys think produces consistency? Just for some opinions.
Your trading process and doing your trading plan, because you know that in the long run it's going to be profitable. That is consistent.
Because that's definitely my opinion on consistency as well. Like if you can have a process that can generate you 10,000 Rand consistently, that means that, or let's just say if you have a process that can generate you 10,000 Rand, and that process definitely functions over maybe the sample size that's able to generate you 10,000 Rand. If it can generate you 10,000 Rand once, it can generate you 10,000 Rand twice, 3 times, 4 times, 5 times. So definitely like Chab was saying, that I feel like for me, consistency is a product of being consistent in a process. Like a process is what produces consistency. Like if you don't have a process that can make you 1,000 Rand, you can guarantee that you're not going to withdraw 14,000 Rand over a space of 14 different withdrawals, because you can't, your process doesn't even generate that first 1,000 Rand. So I definitely feel like it's a product of a process, building a process. And one thing that I can say about a process is that the simpler your process is, the easier it is to follow it. And stop keeping it in your head. Stop keeping the process in your head.
If people can understand that trading is process-based, then everyone will make money. That's the secret sauce. That's the only strategy I can give people. If you can understand that trading is process-based, man, you can do whatever you want.
I hope you just heard what Jabu said. And I guess there's no way that I can make it sound deep, that like having a process is important. But fundamentally, if you honestly think about what are you doing, if I'm Tremaine and I say that I'm a trader, I'm calling myself a trader, what am I doing? Ultimately, beyond all the superficial nonsense of doing risk management, or I'm trying to, beyond all of that superficial nonsense, at the base, what I'm doing is I'm making decisions. And if I was to think about the fact that I'm making decisions, it would then mean that the quality of the decisions that I make would then produce or I can expect an outcome, or would kind of produce the outcome that I can expect. Better quality decisions would generally mean better results over a large sample size. That means that the way that I perform comes down to how efficiently I make a decision. And if you ask yourself, how do you make decisions? You make decisions based off a process. If you didn't know, the first time you ever traded and you chose to buy and sell, your mind still thought of things. Your mind still went through a process of looking, oh, the first 2 candlesticks were green, and so the third one is open green, and so I'm gonna buy. Your mind still went through a process. And so you can see that your process is what kind of determines the quality of that decision that you're gonna make. And remember, we said that the better quality of the decision that you're going to make, probably the better outcome you're going to have over a larger sample size. So then, meaning that, like, if we want to go back, we need to focus on the process of decision making. What governs how I make a decision? If I think about what I'm going to do, I'm going to analyze. So that means I need to have a process that governs the way that I'm going to go about the process of analysis. What are the concepts that I use to make sense of the information that's on the chart? And how do I make a decision with all of the understanding that those concepts have given me? What's the process that I use to trigger myself into the trade? What's the process that governs how I manage this trade? What's the process that governs what lets me exit this trade? What's the process that governs how I engage in risk? The process is going to determine the quality of the decision that I'm going to make when I choose to analyze, when I choose to enter the trade, when I choose to engage in risk. I guess. I was so avoiding laughing at this comment, but I see Nama saying there, please don't sleep, Ntikelo. I tried so hard to keep a straight train of thought. Ntikelo, they're calling you out there. They're calling you out. And I can tell you who it is. It's Namo Ravi. If you want him, I know his name. They're calling you out there. I see Wayne is saying Wayne is saying there that I feel like consistency is a willing power to have that drive every day to keep going and sticking to your plan.
Sticking to your plan.
Yeah. Basically actively making the decision every day to be disciplined, to follow the plan, to stick to the plan. Nice, man. I see Shupung is saying consistency is tracing your trades so that you can see what's working and what's not working. I feel like that's definitely true. That's definitely true. If you think about what you're doing there, the element that you're touching is so damn important. What you're touching on there is you're touching on the documentation of the decisions that you're actually making. Because yes, I can intend to make a decision, like I can intend to follow my plan. I've got a process of analysis. I can intend to follow that process, but in the heat of the moment, do I actually follow that process? And the documentation of, or rather like consistency in documenting that process will allow me to accurately review my performance. Because remember, trading is a performance activity, just like an athlete or just like whoever, just like a boxer. A boxer, it comes down to one moment in the ring. Those 6 rounds, that's all it comes down to. If he hasn't prepared himself, if he hasn't done enough back testing, if he hasn't done all of those things, and the moment of the fight in the match comes and he's not prepared for that, he's obviously going to lose. He'll either be out of weight, he'll miss the opportunity to be in that fight. Same thing with trading. Trading is a performance activity, and it depends on how you efficiently prepare beforehand to engage in the activity. Remember that trading is an actual action. Like I'm saying I'm a trader, it means I'm engaging in the activity of trading, which means that it boils down to how I perform. How do I best engage in the process of trading? How focused am I? How in sync am I? How disciplined am I to following this process that I'm doing? How engaged am I in the process of trading? So yeah, definitely you document how you're engaging that process so that you can actually review and go back to your trading performance. Very deep there, Shupung. Nice, man. Let's see what else is there in the chat. In your opinion, what's the best way to journalize trades? Plus, do I have to stick to a certain reward ratio? In terms of reward ratio, for myself in my own process, I only have a minimum risk to reward ratio, like minimum of 1:3. And in terms of reward, I limit myself based off what the structure can give me. Like even if it seems ridiculous and the structure can give me a 1:9 and I'm not used to seeing a 1:9, I'm not going to limit myself because I'm always closing 1:3 kind of thing. So what I'm trying to say, like in terms of risk to reward ratio, I've got a minimum risk to reward ratio. Like I know that my system needs to have winning trades with a minimum of 1:3 for me to be able to, over a large sample size, be profitable. So I've got a minimum risk to reward ratio that I'm targeting, but in terms of a maximum RR, man, let the trade take me as far. Let the market take me as far as she wants to ride with me, because it might only happen just once. Just once. Like I like to think like how I'm saying that trading is a real is like a performance thing, and it boils down to like the moment of now. It's like you ask yourself, like, what if the market will never ever be as beautiful as, like, even if you think that it's looking absolutely crap, you can't even make sense of what's going on right now. Ask yourself, like, what if the way that the market looks now is the bestest, cleanest price action that you will ever see, and you will never see clean price action like that again. I can promise you that it will cause you to pay a lot more attention in the moment, to be a lot more involved in what's going on right now, to be a lot more involved in, or let's just say, to be performing, to be actually engaged in the activity of trading, maintaining a focus on what your purpose is, which is for you to look at information, interpret information, and to make a decision back based off the information that you've interpreted, not to hold a bias and to think the whole day that I've been looking for sells on US30, US30 is pumping down now, means it's leaving me now. Now I need to jump in. That's not where we at now, engaging in the process, like being aware of, like realizing that, okay, the fact that I need to perform means that I need to be in constant engagement, which means that I need to be reading what's going on and responding to what's happening, not responding or acting on something that I had preconditioned or whatever the case is. But yeah, we digressed a lot from risk to reward ratio. I just looked at the question again and I remembered where we were. Apologies about that. But the best way to journalize is think about how you are backtesting. The information that you use to backtest is the information that gave you statistics. And now you're using those statistics in your live testing, saying that, okay, cool, my system tells me that if I lose more than 5 trades in a row, something's wrong. So it means that when I'm journaling, the same data that I was gathering in my backtest, like for example, the number of trades that I'm taking, the amount of times I'm winning, my average win, my average loss, all the things that help me form my statistics that are guiding me today as a reference point, those are the things that I need to be documenting when I'm journaling. Because, and especially also think about a journal like a checklist, like a trading plan. A journal is a kind of thing that it's like you're writing down and making sure you're thinking about what you need to be thinking about in the process. That's kind of what a journal is. But then at the same time, if you think about it, the things that you want to check down, like you want to make sure, cool, I've got my risk managed. Managing risk, what do you need to do? You need to calculate how much you're risking. You need to calculate your stop loss size. So all of those things are things that you need to document in your journal, because those are elements that affect your process of how you're going to take a risk. They're going to affect how you're going to engage in risk tomorrow, or how you're going to choose to change your trading system, depending on how you're currently performing. So I feel like I always say, like, trade the way you backtest the way you trade. The same data that gave you backtest results is the same things, or the same stuff that you want to make sure that you're still doing, that you're still adhering to, that the same information that you still want to collect. See, USM, okay, I can't see the full name. Do you give classes for beginners? So I guess the course would cover or would accommodate anyone at any point in time, at any point in their journey, I would guess. One more, bro. Why do you discourage ZAR accounts? I have a very strong hatred for ZAR accounts. I'm gonna tell you the reason why, and then I'll share a personal story. Like the first time Lisiva, like I ever touched someone else's money. Like the first time I was ever trading someone else's money, it was Lisiva's money. and I was trading a ZAR account. But anyway, the reason why I don't like ZAR accounts, my main reason is because I can't do quick maths. I can't simply look at my chart and recognize that my stop loss is 10 pips. I'm using 0.01. Therefore, if I see a negative of more than $1, something is wrong somewhere. I either maybe put my stop loss order in wrong or price, or something is wrong, because I can quickly do simple maths with a dollar account. Now with a USD account, I'm going to see thousands of numbers. How do I know that the number that I'm seeing on my MT4, I'm not supposed to be seeing that number? Like, how can I quickly identify that, okay, something is wrong, or the way that this, or something like, where am I within this position? Should I be, am I at an area where maybe I should be? Those numbers are just hard to read for me to be able to make a decision without going to look at the chart or to see that something is wrong. So that's the main reason why I don't like a ZAR account. The experiential knowledge that I have, the first time I ever traded anyone else's money was Receiver's money. First time we ever met, we ever got together and all that nice good stuff. He was just like, yo, dude, let's see what you're about, man. Stop talking to me. Show me what you're gonna do. And then obviously he gave me an account, and there I was trading, and I had some beautiful positions. I hedged. You know, when I say that I used risk management and I used maths to my edge, I traded some AUD pairs. I took a buy on one AUD pair. I took a sell on another AUD pair, two different AUD pairs. And I was hedging. And I managed the risk in such a way that regardless which way that market went, I was on top. Regardless of which way, the only way that I would have been out of that market is if news or something individual to one of those specific pairs happened. But if anything was happening in terms of AUD across all of those pairs, I was in whichever way. Like the position was that nice. Tell you guys, one of the positions obviously went to TP. One of the positions obviously was supposed to run to a stop loss. Now, in my mind, I had done everything okay. All I had to do was just look at my trading view and see. I don't have to look at the numbers. Like, there was no need for, there was stop losses, there was take profits. I was getting into this trade. I knew for me to balance out the money at the end, I had to wait for both of them to close. That would have been the only way I would have exited at a plus. Like, if I closed one halfway, I would have messed up the statistics. So I had to wait for the whole trade to complete. Anyway, just me and Tremaine instantly looking at my trading view. I'm excited. I see one trade hit TP. I see one trade obviously hit stop loss on my trading view. Man, the trade that hit TP was running. The trade that hit stop loss was running in the same direction. So obviously I'm out on my TP, but because I didn't realize when I was putting my stop loss order, instead of putting like 7, 6, something, I put 6, 7. So where my stop loss order was, it was way too far. Tremaine didn't even recognize that something was wrong. Tremaine just came on MT4, he opened MT4, he just saw, oh, okay, cool, it's a ZAR account. This number kind of looks normal. He left MT4 only to come up with a loss that was like, it wasn't a big loss, but in terms of percentages, I think I hit like maybe 12% of that account. And after that, that was like a very sour taste in my mouth. And especially for something that I know, that's a stupid mistake. And I would have never made that mistake, because I always rely on, I know that I can rely on the fact that I can do simple maths, look at my lot size, understand what's my stop loss size, understand what's the pip value on this pair, and just look at the numbers and understand maybe where I am within the structure, whatever the case is. Not that I'm making a decision based off the numbers, but I would have identified that. But because of the difference in the way a ZAR account is calculated, I had no idea. I need to close out like minus 12%. After that, my armpits were even sweating. I had no idea what to do. I was just, I even sent you know, those voice notes when you're like seriously licking ass and like you're trying to prepare to apologize, but you don't know how, because you don't know how this person's gonna respond to you, because I've never been in the situation where I've literally done something totally stupid with someone's money, with someone else's. That's what kind of had me. But at the end of the day, it was like, nah, man, mistakes do happen. Keep doing the things and let's see what you do. Do you make the mistake again? Do you keep doing, or whatever the case is? And thankfully, my next request was, let's get rid of that. Let's get rid of ZAR. I don't like the size of numbers. I'm not in it for the numbers. I'm here to trade. I'm here to look at the chart. That's what matters to me, not the fact that $10 would be 150 Rand. But otherwise, yeah, I think it's just because of the quick maths, and that's why I don't like ZAR coins. What prop firms do you advise? Or do you advise to advanced traders? Yeah, I feel like prop firms in general are for someone that knows what they're doing, for an advanced trader. Because let's not forget that at the end of the day, a prop firm is a business like any other thing. And the way the business is set up is that the business is set up to profit. So obviously, all of the criteria, all of the whatevers that they give you, and all of those things that seem like, okay, maybe they're achievable, they're doable. They've done their homework so long ago, and they know that most of people won't hit those statistics or that kind of a criteria. And so I do feel like the way that a prop firm is designed, the business model of a prop firm is designed for someone that really has the skill, but lacks the capital to be able to trade with the size that the skill requires them to trade with, or whatever the case is. So yeah, I definitely feel like myself, I only have experience with FTMO and my Forex funds. Any other prop firms that's there, I have no idea in how they function or whatever the case is. So those are the only two that I can speak for and say, yes, okay, they won't take your money, they won't do funny things, they'll give you withdrawals. And if you complain, there's support and all of those things. And yeah, it's just FTMO and my Forex funds. I hate when USDs are buying. It means Forex Chasers packages are getting more expensive. And I'm saving for a package like, wait. Damn, I feel the exact same way. Like when I feel, because I try and deposit into my trading account as much as I can. Like even if I withdrew to eat or to do whatever, like whenever I can, like even if I find myself just going on and just putting 50 Rand in TradingView, like because there was 50 Rand there and I know that I wasn't going to use it, like I try and just deposit as much as I can into my trading account. So like now that USD is going up, I feel the exact same way. It's like, okay, cool. The amount I'm depositing is going up, but the numbers on my MT4 are like it's not looking like I'm making a big dent. Like like last year I was able to deposit the same 1.5 and I got $1,000. Now 1.5 is only giving me, I mean $100. Now 1.5 is only giving me what, I don't know, however many dollars. But otherwise, yeah, it's tough. But that's why, like if you think about, like let's think about currencies and stuff like that. Like we're talking about USDs now. What you just said now is very deep. Like in a sense of, if you think about what the function of a currency pair is, and like the assumed stability that a currency pair should have. Like a currency, like if you think about who are the main people that are what's happening in terms of currency pairs, they are, number one, the biggest volume by far, or at least, okay, let's not say the biggest volume because now there's high frequency trading. So let's say the second biggest volume that we can assume is in the markets is from investors. And then maybe we can say the biggest volume is we'll just say speculators in general, because there's people doing funny things now in this day and age. But we can say investors hold a large sum of volume. Like when an investor is trading, he's trading in large volumes. And when they're trading, they're not trading to be in and out of the market. They're trading to kind of hold on for a long period of time. And if you think about like what happens in generally, like with a big volume, it's not like I don't know, what's these central banks are always exchanging funds with each other. It's something that's rare. Like if you think about what happens in scale, things that happen at scale, they take time. Like maybe if I was a business and I was selling something from Euro to US or whatever the case is, by the time maybe I sold whatever in euros and whatever the case is, and by the time that business changed, that's like a period of holding euros. So like if you think about most of the investments and those types of things, they happen over a period of time. The noise is there just to chop us up. Us that think that we can navigate the intraday markets, that's what the noise is there for, the volatility, all that nice good stuff. And plus two currency pairs, they're affected by things like news, political events. What's this guy Donald Trump tweeting can even affect things now. They're affected by a whole lot of different things. So I feel like in general, the environment that we're trading is an environment that, no matter what market it is, it's an environment that gives more to the higher time frame trader than the lower time frame trader. And if you see what's going on, if you think about well, what's a nice bank? What's that fancy bank? JP Morgan, that's that fancy bank that's been involved in money laundering and fraud and all that nice good stuff. If you think about JP Morgan, the part of JP Morgan that makes the most money by far is trading. What type of trading? High frequency trading. What comes after? Investing, mid to long-term investments. Day trading is somewhere down there at the bottom now. Day trading is not something, I'm talking about from an investment perspective. Day trading is not something that produces the money. So if you think about where's most of the money coming from? Most of the money is coming from high frequency trading. Where is high frequency trading done? High frequency trading is done on the smaller time frames. What does that tell someone like me that doesn't know anything that's going into the market, that's just trying their things? That tells me that if I go into the market trading smaller time frames, I already am at a I don't have the right edge to function on those markets. The smaller the time frames, the more efficiently, the more quicker I need to be in terms of those split-second decisions, maybe making decisions, high volume decisions. And maybe if I'm not the type of person that can trade like a high frequency trading firm, high frequency is just looking to get in and out of the market right now and make 2 cents. Like if I don't have the liver to put in one standard lot and be in and out of the market after I see $100 in one pip or whatever, if I don't have that kind of a goal, then it means that I don't have the right edge that's going to really make me a lot of money on the smaller time frames. Like with the environment that I'm competing with, the participants that I'm competing with participants that have an edge that far outweighs mine. But if me as someone that maybe I can say information is not my edge, I don't have access to information as fast as they do on the smaller time frames. I can't make a decision as fast as they do because I don't know if you guys watch the news. There was this event where there was some news release, but 0.4 seconds after, guys, the web pages of the news release weren't even able to download. But within a 0.4 of a second, algorithms had already read the news, interpreted what that news could cause, and had already traded based off what the algorithms assumed people were going to do based off that news. And market jumped or whatever the case is. They call them flash crashes or whatever. Market jumped or spiked or whatever the case is. But if you really see, the smaller time frames are time frames where we just don't have the information edge, the speed of edge to efficiently function on. And so if you can see how I've chose to now change the way that I approach a smaller time frame, is that I approach a smaller time frame from a standpoint of, okay, cool, I know I'm trading in an environment that has a lot of noise. So I should maybe by default expect myself to be involved in some chop here and there. And so maybe take smaller risks, look for better RR to make up for the bigger or for the lower win rate, whatever the case is. But yeah, stick to the higher time frames, guys. Stick to when a 4-hour candlestick closes, everyone is making decision of that 4-hour candlestick. Everyone had to wait 4 hours to watch the full development of that candlestick to be able to make a decision. Even if you make a decision 1 minute after the 4-hour candlestick, there's still that new candlestick hasn't even moved much from, you can still make a decision. So the higher the time frames, I guess the less of an edge other participants have over you. But let's get back to the questions. What do you have to say to people that trade without a laptop? Pros and cons.
It's a con. It's a con.
I don't think there are any cons, dude. Guys, go back and look at my especially going my YouTube channel is perfect reference as to how long I only use the phone to analyze. like it's only ever since I joined Forex Chasers that now I was forced to use a PC, because now I had to record sessions and do all these other things, and that's when I was but before that, I don't, there are people that say I can't analyze on a phone or whatever the case is. But in all honesty, guys, the 4 hour that you will fit on your phone is the same 4 hour that you will fit on your desktop screen, or whatever the case is. We do multi-time frame analysis. Multi-time frame analysis, we separate the information, and we know that we need at least 3 pieces of information to be able to make a good decision. Like fundamentally, we like the number 3. We need at least 3, smallest unit for me to be able to make a good decision, 3 pieces of information. So all I need is just 3 different time frames to make my decisions on. So I feel like whether or not I'm looking at those time frames on my phone, or whether I'm looking at those time frames on a PC, won't really matter to me if I'm still using the same process to interpret that data. Yeah, I guess it's just preference and usability, and maybe just the ability to do, functionality. I guess that's pros and cons would relate to functionality and ease of use and that type of a thing, and screen size, and yeah. Sorry guys, what are proprietary firms? It's basically like a company that hires you as a contractor for the job of trading. They give you access to capital, and then you trade that capital. At its basic level, that's what a prop firm is. I'm still learning the terminology. Everything is still foreign, but I'm willing to learn whatever it takes. Always.
Just expect it to take longer than your expectations.
Yeah, but I feel like it's, if you'll realize it, man. You'll realize it that every expectation that you've got, ultimately it was just an expectation. For which kid?
Mine.
Why?
I don't know. Maybe you want to use the food or something.
Are you leaving for?
Yeah.
You seriously going on a vacation?
Yeah.
Hey. Talk about this guy that's constantly flexing on us. Talk about this. Damn, okay, that's why you're smelling nice. So it was for a purpose. I don't think you can.
Yeah, but my plant will stay here, and then you put it here in the morning, you take it out, you put it in here.
Okay, cool. No stress.
See you when I come back.
No problems, man. Enjoy. I can hear Funny Lucky also screaming from the corner, "Where are you going?" Someone just sent me WhatsApp as Lisiwa. They want me to trade with them. I called him via WhatsApp. His accent is Nigerian. Like, I'll be honest with you that there will never be an occasion where Lisiwa will text you first, or where Forex Chasers will DM you first. The only way that Forex Chasers can contact you is if you've given us your email. So if you've come across something and you've put your email address there, then you can expect an email. Or if you've put your number there, then you can expect a phone call. But that was when our offices were still open. Now that we're moving, our landline is down, so we don't do calls anymore. That's the only way that you can expect something. Anything other than that, trust me, it's something out of the ordinary. And like I was telling you again, that number one, Lisiva's number is hard to come across. And that's kind of, if you think about it, the reason why he's got mentors, for example, people like me, is because he's got probably other things to maybe focus on, whatever the case is. So he doesn't have the type of time to always be scrolling on WhatsApp to be able to answer. Okay, that's why his number is even rare. Like if you find it by mistake, even to get a response is rare, because he's preoccupied with other things. He's trading, he's trying to manage, he's trying to do this, he's doing whatever, all else and the other. So I guess in terms of communication, the only people that I can say that if you're communicating to someone from Forex Chasers, it would either be to Forex Chasers via email, via support, to the Forex Chasers WhatsApp. We've got a WhatsApp info support line. You only find that number on the website, or you're talking to one of the mentors directly. I think that's the only way you're talking to someone that's really here. Otherwise, that's tough there. What's the benefit of having multiple mentors? I would ask you, why do you have multiple mentors, and what's your learning style? Because I feel like my response would be very biased if I don't understand what's your learning style. But personally, I think that you wanna take a process, or you wanna build one process. I don't think it really matters who you take a process from, but ultimately you want to only have one process. And once you've got one process, remember that what's this damn nice English? Sample size. Sample size is king. Like once you've got a process, sample size is going to tell you how that process functions. Like you can take 5 trades, or let's just use a nice round number. You can take 10 trades and win 5 and lose 5. And we can argue the whole day that your win rate is 50%, but take 20 trades and you'll find out that, oh crap, you only won 8 of those 20. That brings your overall win rate down to 40%. So you see how just by increasing the sample size, you get a slight variation in the data. So always remember that the larger your sample size is, the more accurate your data will get, because now the more information your overall statistics is based off. So benefits of having multiple mentors, I don't know, I guess maybe you can get information from multiple sources, but ultimately have one process at the end of it all. Hey, you're bringing me humbly.
I know someone won't admit, but I
Thanks for answering my crack question. Let me crack a joke real quick. I'm not gonna read that second part. I'll see it's a direct message. I'm not gonna read that second part. But yes. Scott is saying there, hi guys, I need an advice. I'm working a 9 to 5. When I place my trades, all my trades is going to profit, but the problem is that I can't open my phone at work to manage them. Should I use pending orders or just scalp? I don't know what's the nature of your job, but when I was working a 9 to 5, I would find opportunities to manage, because wait, did you say okay, wait, but you said, should I use pending orders or just scalp? So if you're saying just scalp, I'm assuming, my assumption is that you're either day trading or swing trading. When I had a 9 to 5, I was primarily swing trading, and the reason for that was because I was using higher time frames and using 1 hour as entry criteria. So I know that if ever price is not at a 4-hour zone of interest, there's absolutely no reason for me to be looking at that chart. And if price is at a 4-hour point of interest, and remember 1 hour is my entry time frame, it means I only really need to look at the chart every hour, because that's when a candlestick closes. That's when I need to make the decision on whether or not to do something. So if you stick to the high time frames, I feel like swing trading does kind of accommodate a 9 to 5, because if you're analyzing on a 4-hour and price is not at your point of interest, you have no reason to look at the chart. If price is at your point of interest, then you have reason to look at the chart every hour. And I feel like that's an okay enough spacing, or at least maybe every 4 hours, every time a 4-hourly candlestick closes, because maybe price is at your point of interest already. So I feel like just swing trade and allow, always remember that, like, the moment there's this resistance between what you're trying to do, like the process that you're trying to create, and the individual that's supposed to do that process, whenever there's a resistance, it's going to be difficult. Like if there's that natural resistance, so you want to reduce the resistance as much as possible so that you can introduce consistency. Like if there's less resistance, it's easier for me to do it again and again and again and again. So yeah, try and make your process accommodate your situation. Like I know we've been told risk 1% of your account and all of those things. But those objective black and white rules sometimes don't accommodate the situation. So it's the same thing, like you create a process that really pretty much accommodates your process. Like for me, if I got a $30 account, risking 1% makes no sense. I might as well just choose to maybe say, okay, cool, I'll blow this account over the space of, let's just say 10 trades, I'll risk $3 per trade. In a sense like that, I'm still practicing risk management in a sense that I'm adhering to a risk management profile. But now what I'm doing, I'm not introducing resistance into the process. I'm not trading, risking 30 cents, looking to make 90 cents, which is something that maybe personally I would feel like I'm not moving anywhere or I'm not doing anything. But I'm still saying that, okay, cool, you told me to practice risk management, risk 1%, do all those things. So what I'm going to do is take the fact that you told me to employ a process, but the specifics of that process, I can make accommodate my situation to reduce the resistance. So I guess, yeah, 9-to-5ers can do it as well, dude. You just need to find a process that does accommodate the situation, the overall situation. Someone responded straight after your text and they said, use take profits, and they responded in a direct message. So they were being rude, but they didn't want you to know they were being rude. No, I'm only joking. But yeah, they said use take profits, but it definitely can help. Like if you just maybe tell yourself that all you're gonna do is once you've triggered yourself into a position, only way you're exiting is through stop loss or TP. That's a very straight and white, it's very black and white. And once you've entered the trade, then there's no element of management. There's no need for you to open your phone and to look at it, because you're either going to be out at stops or you're going to be out at TP. And if that's the way that you're managing, obviously you need to do the back testing and find out what are the statistics in my process without the element of risk management. What is the risk to reward ratio that I need to get, or that I need to set, maybe my minimum risk to reward ratio, so that I stay in a lot more trades than I get out of, because obviously maybe market can go up and then come back down, stop you out or whatever. So what's that minimum risk to reward ratio that you need so that you get a good enough win rate for you to not manage the trade, just set a stop, just set a take profit and let it run. And you know that if you consistently just set a stop and a take profit over a large sample size, you'll see something nice. Yeah, trading is very beautiful, guys, because it's so, I guess you just need to know which elements you're allowed to tweak. Can you tweak? And once you realize that, you see that like it's really just me making whatever I want to make, and I can argue against anyone else's point of view that no, what I see on the chart right now is not a bullish engulfing candlestick. And maybe the reason why I'd be able to take such a stand is because of the process that I've used to tell myself that only if and when I see something that looks like this, like this, like this, it's a bullish engulfing to me. And I didn't learn something maybe in that way or to that degree so that I can be able to argue and say, no, my analysis is right or whatever, or this is what's happening. I've done that, or to that degree, like that level of detail, just so that when the market gives me something, I'm not guessing to ask myself, is this a double top? Should I make a decision now? Is it time for me to buy and sell? I've added enough detail into my process that when the market gives me something, I can see what it is. I've created rules that there's no second guessing or even asking myself if, or should I, might I, or anything other. I'm just executing a process. But otherwise, oh, okay, wait, no. Someone else is saying use, okay, there's another response, multiple monitors. Okay, cool. I don't know how multiple monitors gonna help maybe to watch the trade. Okay, cool. Do you guys have online courses, or want to have someone teaching me and mentoring me? Yeah, that's the whole 3.0. That's the whole 3.0. Which one do you prefer between standards and micro? For purposes of risk management, micro. You'll always be able to dial it back. You'll always be able to dial it back. Definitely micro. But otherwise, guys, we've like exhausted the session. I think it's been 1 hour and 40 minutes. Because I think we started at 10. So otherwise, I think let's call it a session. I don't know if anyone else was late in the session. You guys will catch. Yeah, because it's Friday today. I think we do need to upload something on YouTube. So I'll just re-upload this, maybe for someone that caught it halfway at the end or whatever. or wants to go back or whatever the case is. Yeah. Otherwise, Gregory, thanks, man. Mr. Pala, thanks, dude. Thanks for being with us. Scott, appreciate you, man. I see Del there in the building. Thanks for having us. Oh, I mean, thank you for being with us. I see Chandra there in the building. Thanks so much. Thanks for being with us, Chandra. I saw you dealt with Baby. Baby's even sleeping now. I'm sure Baby's dreaming about higher highs and higher lows now because Baby's just been hearing Forex jargon for an hour and 40 minutes. Tikelo, thanks for being with us, man. Thanks for being with us there. Kabende. Nice, man. Thanks for having you, man. Thanks for having you. Otherwise, guys, let there be peace there in the streets, guys. Thanks so much for being part of the session. Yeah, let our brothers and sisters be safe. We'll see you guys. Cheers, guys.